Welcome to Definity Academy virtual sessions for the spring here. My name is Matt Patalona. I'm the head of marketing here at Definity. And it looks like we are live now. If you want to throw in the chat, if you can hear us, that would be appreciated. We are on a new platform this year that streamlines some things for us, but also always comes with some learning pains. So hopefully we're live. I'll go ahead with the intro here and we'll continue on. So again, our goal here with Definity Academy is to bring you some really great information, and we have some great sessions over the next few days to bring you some valuable practical insights that we're hoping you can apply right away in the work with your clients. So later today in our financial advisor track, we have a partner panel. We also have a session on client success tomorrow. We're going to cover cash balance. We have separate sessions for both our plan sponsors and our financial advisors. We also have a session on positioning retirement plans for what's next with plan sponsors. Today, our first session is facing an IRS or DOL audit. We can help. And that's hosted by Betsy Schaff and Susan Poliquin. And Betsy is an ERISA attorney with Definity. She has more than 2 decades of experience in ERISA counsel and retirement plan administration. She's held senior ERISA counsel roles at Emeritus, served as an ERISA consultant with Ohio National, and most recently was manager of retirement plan administration with Alliant Insurance Services. Susan is the director of document services at Definity, where she leads a team responsible for ensuring retirement plan compliance with IRS and Department of Labor regulations. She brings over 20 years of experience in retirement plan design, compliance, and administration. And today's session is being recorded and will be available on demand later this week. And just a reminder, questions are welcome, so please enter your question into the Q&A function. We'll answer as many as time allows. Any we don't get to, we'll follow up with responses. So with that, happy to hand it over to Susan to get us started. Susan?
Sure. Sure. Thanks, Matt. We want to kick this off with a poll question. We can launch that first. Perfect. We just want to know, has your plan been audited? I'll give that just about 30 seconds, and then we'll see what the results are. It seems that we've gotten the results, and it looks as though about 88% have not had their plan audited by either the IRS or DOL, and 12% of you have. So, all right, that's good information. All right. So with that, we can launch into our slides.
I will get our slides up. One moment.
No problem. No problem. All right. Always challenging with technology. All right. This is great. All right. So nothing, for those of you that have been through an audit, you know the fear of seeing that IRS or Department of Labor envelope in your mailbox. Although it can be alarming, it does not necessarily mean that it's the end of the world, and we can certainly assist you with anything that they may be looking for. Sometimes the plans are just selected randomly, meaning you got the luck of the draw. It may not feel like the lottery, but you certainly won a look-see at your plan. What you can expect is you'll have that initial notice plus a lengthy document request. So it's going to be a thick envelope with a lot of pages to it. And it's going to have a firm deadline that's typically on the first page of the notice. And that's the key that you want to pay attention to. Often what happens is that employers will hold on and kind of procrastinate and then come to us, 24 hours before they need everything. So we really want to encourage everyone that if you get a notice like that, don't panic, but make sure that there's you get a hold of us or your provider and meet that first deadline. So the priority is meeting that initial deadline and keeping the auditor relationship constructive, keeping lines of communication open, providing things timely, being organized. All of those things go a long way with auditors in our experience. So why are you being audited? Again, a lot of times it's just random audit. They're going to select a certain number of plans each year for compliance and just making sure it's their way of keeping a pulse on what's happening and making sure that employers are administering their plans in accordance with their plan documents and in current law. It can also come as a result of referral from other government agencies. And also, if participants are not happy and they go and complain to the Department of Labor, that can trigger an audit as well. The last two bullets here are probably some of the more common ones. Late contributions, so primarily like elective deferrals, if they're not timely contributed. And that is reported on the Form 5500, whether or not they're timely contributed. And late or incomplete filing of Form 5500. So if you're missing certain years of Form 5500, you're likely to get some type of a letter from the IRS requesting that you do that and potentially triggering an audit. So again, all of these are things we can help assist with, but it's not something you don't want to ignore. All right. Next slide.
Thanks, Susan. So I do think it's important to differentiate between who's auditing your plan. It'll either by the IRS or the DOL, and both have a different focus. IRS looks more at the tax qualification side, more discrimination testing, compliance work, whereas DOL is looking more at reporting, like the 5500 and participants' rights. So if a participant makes a complaint to a local DOL field office, that will often trigger an audit from the DOL. This is usually seen where, as Susan said, with late deposits. I had one earlier in my career where it was a plan where it had inordinately high fees. So they called their DOL office and complained that the fees were too high, which was surprising to me that the DOL actually took it. And it came up that this was a good one. The plan had moved around a lot and they'd done a surrender charge restoration for plans for investments that had surrender charges. And they realized that the investment companies who had taken them over hadn't stopped the makeup charges. So the fees were inordinately high. We had to work with DOL to make sure that we explained that that was permissible to do and that we would restore all the participants' accounts to where they should have been. Not exactly ideal. Okay, next slide. Common issues they tend to find in audits, contribution reconciliation. They want to make sure that the 5500 matches up to the asset statements from the investment providers. They'll notice that participants may have been missed for eligibility purposes. They may have noticed that true-ups were not properly allocated or excess contributions were not properly removed from the plan. Sometimes they'll find a control group issue, and this is more when we're having the audit interview. They'll ask the owners, do you own anything else, and do you have a plan with that company? And this comes up frequently. They'll look closely at plan document issues to make sure that plans have been properly and timely amended for restatements and interim amendments. They'll also look to make sure that the plan operations are matching the terms of the plan document. They'll look for top-heavy mistakes. If a top-heavy contribution is missing or it was allocated incorrectly, that's something that we'll have to correct on audit.
Next slide. All right, so some of the common plan document / operational errors, we do see this a lot. So it's really important to understand what your plan document says and to periodically update it if it's not meeting your current requirements. So some of the things that we see on some of these that are being questioned are part-time employees that are excluded despite meeting eligibility requirements. With secure, the Secure Act, you now have to include long-term part-time employees unless they are in a specific excluded class not related to their part-time status. And so they're going to look to see if you've included them on that. Eligible participants not offered the plan and or not provided the employer contribution. Betsy mentioned in the previous one about eligibility. So they are going to pay attention to that. That's one of the things they do look at, is they want to look at your census and say, and compare it to what your plan document says. So if your plan document says that they should be eligible, and you haven't brought them in, that could be an error that needs to be corrected. Distributions processed that are not permitted by the plan document. This is something, again, there's a lot of flexibility in plan documents. So if it's something that you want to include, it's a simple amendment to your plan document, but you have to make sure that your plan document is covering what your current needs are. Employer match and profit sharing contributions when the plan doesn't permit that. So if your plan, when it was originally established, did not provide, for instance, for an employer match, and the company decides that they want to offer it, that's great. You just have to make sure that your plan document outlines that. And again, it's an easy fix. It's an amendment. So it's not a difficult process, but it is one that you need to check if you're changing anything over time. Something we've seen some litigation on over the last few years is forfeitures used or allocated impermissibly. Betsy had shared with our teams that there's been a lot of litigation here. And compensation used for contribution calculation not aligned with plan document. Compensation is a big issue. Not everybody understands it, particularly if they are excluding a lot of different types of compensation. So that is something you definitely want to compare to your plan document. We've had a few, I know I had a few audits that I assisted with that compensation was the issue. So again, you just always want to make sure the document is matching what you're doing in real time. Next slide.
So what to do when you do receive this audit notice? As Susan said, it can be scary or intimidating to see a letter or an envelope from the IRS or DOL. The most important thing is don't ignore it and don't panic. As she mentioned, there's specific deadlines in these letters, and there's what's called an IDR, an information document request, that will have dozens of documents that are required. Usually what we can do is they'll break them out into separate spots or parts. So what you want to do is contact your service provider, usually your TPA, and you might want to consider engaging counsel or your TPA to represent you for the audit purposes. I do represent a lot of Definity clients during audits if they request. I think it's a good idea, honestly, because what happens sometimes is these auditors will get on the phone. Some of them are newer than others, some of them are very savvy, so you want to make sure you're only answering the questions that they're asking you and not giving them any extra information. As you engage a person, make sure you let them know there's any concerns or challenges for the year being audited. So like for 2023, if you know you had some people who weren't enrolled timely that year, make sure you let your power of attorney know that so they can be prepared for the issue to come up during the audit interview. Speaking of the power of attorney, you'll want to execute a Form 2848, which is a declaration of a power of attorney representative. This will allow that individual to speak on your behalf to the IRS. Otherwise, they won't speak directly to us. Everything will have to go through your office. Believe me, you do not want that. And then what we would like for you to do is designate someone on the client side who we can go to for information on an on-demand basis, because sometimes there's a lot of back and forth. So we want to make sure we've got someone on your side who is willing or able to grab the information that we need as soon as possible. There's also a new thing that's relatively recent. There's an IRS portal to share information. What's interesting to me is IRS does not consider email secure. So what they prefer to do is either fax or use this portal. It's always boggled my mind that they think a fax machine sitting out in the middle of a room somewhere is more secure than an email. So this portal is helpful. So what it does, it's basically I get a code and you would get a code and you would see anything that goes back and forth. And I know I've had some plan sponsors who've had issues with the verification to get into the system because it is quick. It's one of those where it's multi-factor authentication. They send via email. You got to wait for the code. and it's pretty quick. Otherwise, you'll time out. So what to expect during the audit? As I mentioned, there's an information document request. They'll ask a lot of things like payroll records. We will need to get that stuff from the plan sponsor. They also ask a lot about I-9s. How do you hire people? How do you onboard them? How do you let them know they're eligible for the plan? So, and I have one auditor who actually decided he didn't want to do an in-person interview. He gave me his checklist. So it's been really helpful for me that I can share that with clients that we deal with. So I can say, these are the questions we can expect to see. And you can see as we have these meetings how they walk through it. And I don't think an experienced auditor would ever do that, but I'll take what I can get. The interview is either in person or virtual. I usually try to push for a virtual interview just because I wouldn't be local to an office since Definity is national and I'm located in Ohio. It's usually a good excuse for the plan sponsor to say, listen, my power of attorney isn't local. She won't be in the office, so can we do it remotely? And usually they'll say, oh, be okay. And the reason I don't like it to be in your office is because it can be disruptive. They can ask a lot of questions. The last time I had one, the auditor showed up and she just wanted to do all her work papers in their office. So, I mean, you have your own business to run. You don't need someone from the IRS sitting in the corner looking at all the documentation we provided them. So to the extent we can do it remotely, I think that's all the better. Again, best practice is be organized, be helpful, only answer those questions that they're asking you. Be confident, be respectful. And I did have a recent audit, which I don't want to go off on a tangent, where the auditor asked if there had been any recent amendments. And there had been. In this one, they had amended the plan in 2023 to fully vest anyone who terminated in 2023. And the IRS auditor said, well, do you remember who that person was? And the plan sponsor said, oh, yes, it was one of our partners. And I kind of put my hand in my head because that could look very discriminatory if you fully vest a highly compensated employee. For some reason, the auditor didn't even blink at that, and it was not included in their audit report at all. So I think that person was relatively new. If they do identify an issue, we will proactively try to correct it with them and come up with a solution to make sure that they'll be receptive to. Usually there's something that's in the IRS correction programs that we can look to say, how would we fix, like, say, a late entrant to a plan? We'd give them missed deferral opportunity along with late earnings. Once we get any issues that are identified cleaned up, we'll go through it with the auditor. We'll have one final call or an email, and they will receive a closing letter. So once you get the closing letter, you're good to go. Next slide.
Okay, so what can we learn from all of this? As Betsy mentioned, it's, a lot of times it's what you don't say versus what you do say. And that's where Definity or your provider can help. We're less emotionally involved, so we can be a little more matter of fact with them. And like Betsy said, we may uncover some things. We are not obligated to tell them if they don't ask. We are obligated to tell you as the plan sponsor and help you get it rectified so that you are in compliance going forward. And we certainly will help with that, but we're not obligated to tell the IRS anything more than what they're requesting. And that has been to the benefit of the plan sponsor numerous times. So what can we learn and what's some best practices? Keep good records. Being organized really goes a long way. Auditors, and Betsy and I have both been involved in audits. When you show that you're organized and you can find these things and you have all the pieces that they're looking for, it kind of sets the mindset of the auditor that they're doing what they're supposed to. If it takes weeks to find, for instance, plan documents, that's going to put them a little bit on guard that maybe other records might be missing as well. So keeping good records, not only your plan documents, but also, payroll records, tax returns, things like that really goes a long way. Maintain timely executed plan documents for as long as the plan exists. So if your plan, we have some plans that were established in 1964. Guess what? You should have all of those plan documents. They don't expire. They do get restated, but sometimes auditors will want to see prior documents. So it's always a good idea, for as long as the plan is in existence, to keep all of the plan documents, including amendments, in a safe place to be able to pull them out if needed. Notify providers when your business changes. This trips up a lot of plan sponsors because they're involved in what's going on in their business. Of course, they have an entity change. They're acquiring. They're being acquired. They're having layoffs. All of these things potentially have an impact on your plan. We can help you through that and tell you if it affects the plan, and if so, what you need to do to stay compliant so that you don't run into any problems should you be involved in an audit. Understand and follow the plan provisions. That's really a big one. You want to make sure, if you haven't looked at your plan document for a while, it's a good idea to do that. There is every 6 years, your plan documents get restated for 401k plans, 403b plans, defined benefit and cash balance plans. They all get restated if they're on a pre-approved document every 6 years. So take that time. The 401k restatement is coming up soon, and it's a good time to review your document, see if it's still meeting your needs, your business needs, and if not, have it updated as part of that process. Request plan changes as your business needs evolve. If all of a sudden you went from a 10-person plan to a 100-person plan, you might want to have a conversation with your representative to see if the plan design still makes sense for you. There's lots of flexibility within plan documents to help you to pass testing and things of that nature. So it's a good idea to have periodic check-ins and reviews of your plan document to make sure that it's still meeting your business needs. Big one here, the next one, timely deposit deferrals. You need to do it as soon as administratively feasible following the payroll date. So, it's not monthly, unless, of course, you're getting paid monthly. It should be done as soon as administratively feasible. And they do look very closely at those, at what is as soon as administratively feasible. So you want to make sure you do that. Another area that's come up on audit before is timely processing required minimum distributions. So, at a certain age, they have to start taking distributions. Again, depending on your plan document, it might be able to be delayed until they actually retire. But some, if it hasn't been updated, might need to take them at a certain age. And so you want to make sure that if anyone is in that stage, that they are getting them timely. It has a negative effect not only on the plan, but also on the participant if they don't take those timely. Timely file your Form 5500. You want to make sure you're not missing that. There is, if it's hard to get the information in time, you can get an extension, but you don't want to exceed that extension period. Otherwise, you are likely to get an IRS letter asking, where is it? Hey, you haven't filed this. So you want to timely file those whenever possible. You want to timely restate your plan documents. Your plan providers should be alerting you that these restatements are needed and what you need to do. Typically, there's a 2-year window from when it opens. And so you just want to make sure that you're not, so there's plenty of time to do it. You just want to make sure that you are getting it done and not kicking it down the road too far. And that keeps your plan document in compliance. And by the way, the plan document is like the first on the list of every audit is, let me see your plan document. That is like the number one item on the list.
And a signed plan document, not just
a signed. Yes. Thank you, Betsy. Yes.
Yep.
Make sure that when you're getting these for signature, when you establish or when you restate or when you amend, that you're actually signing them, because they will, in the IRS's opinion, if it's not signed, it's not valid.
Right.
And so you may be operating within those parameters, but if it's not signed, you could get an auditor that says it's not in play. So you really want to make sure that you're timely restating and executing those plan documents. And as Betsy mentioned earlier, organized responses to the IRS. Some of them, it is funny. Some auditors have pages and pages of stuff they're looking for. And a lot of times they'll even come back with more things as they look through them. So it's okay too to send them in parts So, I know when I was doing some of them, it's like, okay, I'll send you the plan documents first. If it's going to take me a little time to get the other stuff, then I'm going to send those next. You don't want a lot of time going in between these, but at least it alerts the auditor that you are working on this and that you're getting things to them. So being organized, Betsy mentioned, providing them in the order in which they appear in the IDR or referencing what item in the IDR is helpful, and especially if there's pages of it. And it certainly, in our experience, has been appreciated by the auditor. And I'm going to just echo what Betsy said, is that a lot of these auditors, they don't always know to the level that we know the rules about retirement plans. And so oftentimes we do have to educate them nicely, of course. We always do it respectfully because we certainly don't want to alienate the auditor, and we want to show being helpful. But sometimes we do, in the interest of our client, need to educate them on some of these to confirm that they are compliant.
Right.
So those.
And really leverage your service provider. I know a lot of people get very stressed out when they see their IDR. Your TPA will have most of these documents. Don't feel like you need to go through all your records and try to find them. So if you reach out to the TPA timely, then we can help you with meeting that first deadline.
Absolutely. Absolutely. So these are the things that the list of the best practices we've come across based on our experience. We hope that they're helpful. We do have one more poll question we'd like to launch. Do you feel being represented through an audit of your plan would be helpful as opposed to handling the audit yourself directly? Okay.
Well, that's
I
good.
like that. Yes, I like the answer that I'm seeing 100%. 100% is saying yes, it's helpful to be represented. And that's, we want to make sure that you folks know that we have done hundreds and hundreds of these over our careers. We're comfortable with those. We take the emotion out of it so that you
Right.
don't have to worry about it. And then again, if we find anything or if the auditor finds anything, oftentimes they'll say, okay, here's what we found. Here's what we need for you to fix it. And there's not always a penalty for it. They just want to know that you're going to be compliant going forward. And we
Right.
help you with that as well. So it doesn't have to be scary. It does kind of put a pit in your stomach, but let us help you with that. We are more than happy to represent you and be that voice for you and be that advocate for you.
Absolutely. And some auditors are more conversational than others. Like some of them will tell you why they're looking at the plan. That's unusual, but it's just to the extent we can establish a rapport with the auditor, that's all the better.
Absolutely. Absolutely. Okay. Do we have any
Okay.
questions?
Let's take a look here. We do have one that just came in. Um, would this service be built into our annual fees, or because this would be more of a random selection or an as-needed service, would it be priced at the time of need?
It's priced at the time of need. I can tell you it's a lot cheaper to use your TPA and their TPA's counsel than it is to go out and get your own counsel. And I'm not trying to tout our services, but I am. But I will tell you that if you're going to go with your own attorney, make sure they are an ERISA attorney, because some like just individual tax attorneys or family practice attorney would not be equipped to handle all these questions. So it would be an extra charge. We try to keep it very limited. So before we would represent you, we would have that conversation.
Right. And I think too, I'll just add that because of our experience, I think that we, can do it in a more efficient, streamlined manner because
Right.
we
And
are.
especially since we have all the
Yeah.
documentation with the TPA as
Right.
well.
Right.
Sure.
We'd be
Thank you.
happy to help.
Okay, another question. When is Form 5500 due?
That's
Okay.
kind of a
So
loaded question, depending on your your plan year. So for a calendar year plan ending 12/31, I think it's 7/31 without extension, isn't it, Susan?
it is. Yep.
You're the
So it's
CPA.
7 months following the end of your
Plan year
plan
end.
year.
That's right.
So
You
whatever
can
seven
extend
months
it.
is, yep. the majority of plans are calendar year plans, and so that would be 7/31. You can then get a 2.5 month extension to October 15th if needed. But the first deadline is 7/31 for those calendar year plans. If you're an off calendar year, just count out 7 months and that's when it's due.
Absolutely. And I want to point it out too when you're talking that if your 5500 is late or there's been a problem with it, make sure you reach out because they have correction programs to correct all these things proactively. And the correction for a late 5500 for some reason goes to the DOL. They have a delinquent filer voluntary correction program, which is a mouthful. But it's real easy to go through. You just file your 5500, check a box, pay your $750, and you send it through, and that waives the $1,000 per day fee that they're going to hit you with if you don't go through their program.
And I'll also just add too, on that same note, is that under the correction program, it's called the Employee Plan Correction System, EPCRIS, they have expanded that to allow a lot of self-correction. So
Yes.
if you know that your plan has some issues, we can self-correct before an audit ever happens.
Absolutely.
So, and that's the preferred method, honestly, because once the auditors are always going to look at when did you become aware of this problem and when did you take steps to correct it? And they are a lot less lenient if it's been going on and you knew it for years and did nothing about it. So if you are aware of any kind of issues, don't ignore it. We can help you get it into compliance through self-correction. And self-correction means we're not alerting the IRS or the DOL on this. We're doing it and we're documenting it. In the event of an audit, they can see, hey, you acknowledged that there was an issue. As soon as it came to your attention, you had it corrected with your providers, and it's all documented. And that usually goes a long way with auditors if they see that you've self-corrected something.
Agreed. I've only had a couple auditors question it, and they wanted to make sure that we followed all the steps that were in the EPCRIS program. And once you demonstrate that and show your documentation to the file, they're very quick to go away and be like, you did it. Thanks. And they'll move on. So it is a good thing to show you're inclined to voluntarily correct.
Yeah.
And that's why I bring up too, if you know of anything when the audit letter comes, let us know so we can try to, I don't want to say hide it, but get ahead of it so that if it does come up, we're prepared with a resolution to offer.
Sure.
Exactly.
All right. We do have another question. If my total plan participant count is more than 120, is a plan audit required?
Yes. Well, 120, yes. So in that we're talking about an independent auditor's opinion in that case. And we've been talking mostly about a governmental audit previously in the session. So yes, you would have to have an independent audit from a provider to attach a report to your 5500 filing.
And we'll just add, that's not a service that Definity provides. We're not auditors. We will assist through audits from the IRS and the DOL, but that is something you would have to go to your CPA or auditing firm to
Yes.
get. It needs to be attached to the 5500 at the time of filing.
Exactly. And it's independent opinion. So even if we offered it, they wouldn't want to take it from us because we'd be the TPA. We couldn't be the auditor as well.
Right. We don't have the independence.
Right.
Okay. Last call for any final questions for Betsy and Susan. Okay. Well, Betsy, Susan, thank you so much for the session. Very informative. Everyone who is in the session will receive a survey. It should pop up shortly or come an email shortly after. We'd love your feedback on the session. And then just as a reminder, coming up here at 1:30, we do have our Record Keeper Roundtable for the Financial Advisor track. And then we also have a session later today at 3 o'clock to grow your business by helping more clients. And we appreciate your patience there with some of the technical difficulties. It looks like most of them are resolved. And we will have the sessions playing in the lobby as well later. So if you do have a hard time getting in, you will be able to continue watching. With that, I'll thank everyone for joining. Thank you, Susan and Betsy. And we'll hope to see everyone on the Financial Advisor track in a little bit here. So thanks.
Thank you.
Bye now.